What is going on, everybody? Welcome back to Trading Learning 101. It's Money Monday, June 17th. We're just after 11 a.m. Hopefully everybody's having a great day, starting the week off to a great start. For me, I'm starting the week off on the red side. We will go over that. I took 2 trades today, 2 for 1, or 50%. I lost one and then I won one, but my second winner really wasn't much of a big winner. When I already take a trade and I'm red on the day, I want to try to reduce my risk even more because I don't want it to try to get out of hand, because I know it can get really out of hand really fast as a trader. So again, hopefully everybody's having a great day. I was just taking a look here at VISL. Let's jump into what happened today. Not much was really gapping up on the gap scanner. The only thing that was really gapping up was CTRV and RWLK, I believe. RWLK gapped up from this 520 level up to 550, and just really choppiness. No volume came into RWLK, and then you can see it just sputtered out. You could see something real cool with this. It opened up at around this 550 level right here, and it shot all the way up to 575. And just look at all these long wicks right there. That's telling you that there's weakness in the stock. Every time this thing was popping up, somebody was unloading into it, and it kept pulling back down to this 550 level right here. Kept coming down to it, and popping up. And when you see all those long wicks, that's a bearish signal. And then when it finally fell below this 550 level, look where it's acting as resistance right now. All right here. Very light volume, but it's just probably going to fade off, probably. Let's jump into CTRV, the one I took a loss on today. This stock was a tough one today for sure. I thought that CTRV was setting up just like how PRVB set up last week. If we take a look back at PRVB, way back here on this day, last Monday, zoom in on it. As you can see, let me zoom in a little bit more. PRVB got really tight at that open right there, forming a wedge, and then from that $10 level just exploded all the way up to $22 and got squeezed. Today, CTRV looked like it was setting up the same thing as PRVB. You could see it right there at the open, forming this wedge right there. And this is a low float stock. Easily from this 15, it could have exploded back up to pre-market high of $19 and $20. But I got FOMO get the best of me, and I took a loss on this thing. And I was even up in profit on this trade, and I got greedy. I only jumped in with 200 shares. When a stock is a low float like this, and it can really rip dollars at a time, if you go in really big, 500, 1,000, 1,500, 2,000 shares, it could really hurt your account if it falls to the downside. But it opens up right here at $16 and rips right down to 14. See, look at that. From $16 to $14, a $2 rip right down, and then it rips right back up to $2, up to $16.25. And then when it ripped back down here to 14, that's when I got in. I got in at 14.25. This ripped right back up over 15. This is when I was in profit right here. I was up just over $200. I got greedy. I thought that this was going to break out and squeeze. I didn't lock in my profit. And I always preach, you guys, you always got to lock in profit. You're a professional profit taker. Cut those losses as fast as you can and take that profit. Who cares if this would have broke out and ran to 20? As long as you're able to make a little bit of profit every day, that's what counts, because gains will add up over time. I broke my rules. I didn't take profit, and I paid for it. This came right back down to that level right here, and as soon as it broke through that 14 level, I cut it for a loss. And I took a loss on it, and then it popped right back up again, and you can see this support right there where it was bouncing at right here at 14 and popping back up to this 15 level. When it finally broke through it and when it popped back up, look at where it found resistance at, where old support was, all right here. And then after that, it cracked back down, made a new lower low, and then it just hung around 14 and then cracked all the way down to 1275. And then from 1275, this grinded all the way back up to $14, that resistance right there. And then it was just sitting there. And whenever you see a stock just sitting at a resistance level and you're in on it, it's best to get out before this happens. And look what, boom, right, a dollar rip to the downside to $13, pops up to $13.50, and then rips all the way down to $12. This was definitely a trickier stock today, I would say for sure. And then it bottomed out here right at $12 and then just slowly grinded its way all the way up to $13.50. But there was something pretty interesting on CTRV. If you look at the 15-minute chart on this and zoom in, right here, I'll draw a support line. Look at the area where today, when it came back down, look at right where it bounced at, that 1240 area. And if you go all the way back, that's where these candles, around that area, these candles closed right here, and where it topped out right there and right there. You see how old resistance held as support all right here? And from that 1240 area, got a nice pop up to 1350. That's the power of looking at multiple time frames. And I only didn't look at this and realize it till after I took my loss. So you always want to try to wait and have patience. Even though I was up on this, I let FOMO get the best of me. I let greed get the best of me, and look what happened. It bit me in the butt. So then after CTRV, I'm looking around, and then ARQL starts going with the continuation from this 840 level all the way up to almost $10. We'll get into that. And then VISL started popping off, ripping up from $1.50, getting halted at $2, reopening at $2.40, ripping up to almost $3, and then pulling all the way back. I slapped on Fibonacci's on this from the swing low here to the swing high. If you haven't been around in the markets, low float reverse splits have been the hot thing. And if you look at VISL here on the daily, recently here on the 13th of May, the 13th of May, it did a reverse split right there. And this came all the way down to $1.50 and then popped up to $3. And look what happened again. Came all the way back down to $1.50 and gets a pop again back up and over $3. Two opportunities right there just by keeping this on your watch list and keeping track of it. When it did its reverse split here at $3, this sold all the way down to $1.50, hung around and flatlined it, got momentum, and popped right up to the reverse split of where it opened. Slowly sold off back down to the level where it originally before it popped. And then look at same thing again today. Pops right back up to that $3 level. You got to look out for stuff like this because traders love looking for patterns in the stock market. That's what it's all about, especially in low float land. You can really tell what stocks are going to do most of the time in low float land because it's all just emotions. And human nature never changes. Just like what Tim Sykes says, human nature never changes. So I put Fibonacci's on this from the swing low here at $1.50 all the way up to $3.50, and I was watching this and it pulled back around 50% of this big run up right here, or right here originally. None of this right here happened yet. This pulled all the way back, bounced right here at that 50% retracement level. And then from that $2.30 level, this started getting momentum and moving its way on up, right up to this $3 level right here. Came up to it, pulled back to 260, bounced off the VWAP, moved its way on up to $3. This is where I got in on my entry. I didn't get in big. I only jumped in with 200 shares. But all this volume started pumping in right here. I know that this is a low float stock. Volume's pumping into it. It's just a common sense thing of supply and demand. I know traders want this when I start to see volume pumping into this. It's going well up over 1 million in volume on the day, approaching 2 million in volume. I took a position right at the break of $3, and then this popped up to just over 325, and I locked it in. So I was able to salvage a little bit of my first loss on CTRV. Not much, $70, but I'll take it. And then this pulled back and then it ripped up to 350. Really good momentum on this right after this pullback down to this 50-cent retracement on it. And you'll see this happen a lot on low float stocks. When you see a low float stock rip up really huge, be patient. Wait for it. Throw on some fibs on it. Let it sell off and pull back. Look at around 50% in the 61.8% area. That's where traders with low float stocks like to look for a potential bounce, and it rips up to the upside. And that's what happened today with VISL. Bounced right off that 50% level, grinded up, volume started coming in, and look at from 230, this grinded all the way up to 350. Nice move on VISL. And then after that, traders all take their profits and it crashes all the way back down, right back down to the level where it started from. That's all traders do with low float stocks, is they just abuse them, use them and abuse them. That's all they do with low floats. They don't care about the fundamentals. They don't care if it's a good company, if it's volatile, if it moves. Traders will trade it for profit. EIGL or EIGI, nice grind up today. Right at the open, explodes from 450 all the way up to 550, pulls back to around 525, grinds all the way back up to 550, just getting tighter and tighter right there, and pops up to 575. Then we got CJ here having a nice grind, and if you can compare the chart of CJ and ARQL, they match up almost perfectly. Watch, I'll show you. You see there, on ARQL, how it has that sideways action right here, and then it got that pop, and then it went sideways again. CJ, sideways action. Actually, I think I'm on the 3-minute. CJ, sideways consolidation, pop right there, more consolidation, and then starts to grind up. ARQL starts to grind up and gets momentum. Same thing with CJ. And they're in different sectors too. That's what I don't get. And they're both on different exchanges. Yeah, CJ is on the New York Stock Exchange and ARQL is on the NASDAQ. So that's odd in my opinion. Let's break down ARQL real quick. This is where the easy money was today. ARQL had a great day on Friday. This is the importance of keeping these stocks on your watch list. Friday, I didn't trade ARQL. I've had bad experiences with ARQL. And when you're a trader, if you have a bad experience with a stock, in the future, if it pops up again, you'll remember it and you won't even touch it. And that's my experience with ARQL. I didn't touch it on Friday. This had great opportunity on it on Friday. Even though it sold off right there, this bottomed out right at 820 and popped all the way up to 885, back down to $8, right back up to 850. Good opportunities on this Friday. And then look at that. It flatlines right here at around this $8 level. Up to 850. Going into the close Friday. Now if we fast forward over today, where does this stock open at? At around $8.20, the same level it closed on Friday, and from 820 popped up to 850, that range from Friday, and then surged up to 880, pulled right back down to this 850 level, started to slowly grind up, get momentum, and then boom, explodes all the way up to $9.80. Zoom in on this. See how it just popped there and then was just riding the VWAP, just slowly getting momentum, slowly grinding, and then just takes off. all the way up. It topped right there at 950 and then got a nice little pullback and then ripped up even more. But this also, look at right where this bounced at. From this 950 area, this kept popping up to 970 right there. 950, 970, 950, 970, 950. That time it almost went up to $10 and then it failed and it came right back down and look at where it bounced. 950 back up to 970. Pop there, back down to 950, right back up to 970, and then right there, that's when it finally cracked. But for a scalp trader, 25-cent scalps, 1, 2, 3, 4, 5 times they could have scalped this for 20, 25 cents. Scalping it 5 times, that's a $1.25. But this finally broke through that 950, and look at right where it bounced at when it surged through that, when it pulled back right here, this area. And then from 930, grinded all the way up, just past 950, shallow pullback there, right back up, and then came right back down to its support area of right here, and then broke below it, and now it's hanging around this VWAP. And look at that old resistance at 930, or support at 930, is now acting as resistance. So you see how these stocks like to move in stages? Every stock has their own personality and likes to move in their own way. That's why you gotta observe what these stocks are doing. NBY was having a little bit of activity. This is that Amazon stock with the pharmaceutical. Very, very weird moving stock. Very weird moving. And it just goes to show you how fast volume comes and goes with these small cap stocks. So it's kind of hard to keep tabs on them after they make their big, big move. But after it ran from 30 cents all the way up to well over 450, this sold off all the way down to $2 and then just slowly just kept fading out, popping up and fading out. Big U shape right there. But this stock is a weird mover, and I've only been watching it. And just look at this thing from a $1.75 rips all the way down to a $1.52, rips right back up and all the way back up to where it opened, came back down, formed a wedge right here at a $1.66 and popped up to $1.82, just slowly grinding up to $1.85. Very, very light volume and not much range on it, like 20 cents. This company needs like a big press release for volume to come back to this. I think it's just best to leave NBY alone. It's probably just going to fade back off and people are all going to forget about it. SYBX starting to get a little pop right now. Very, very light volume though. This is what I'm talking about. It had a big day 3 days ago right here. Getting volatile and moving. This is why you keep these stocks on your watch list, because the next day it didn't do anything. And then the third day, look at it starts to base out at the 750 level and is popping up to 850. LK, we got a good example on LK today. So LK opens up just below $20. And if you know me, I'm a big fan of my mental levels. $20 is another big level, one of those whole dollar, $10 levels. LK today opens up just below 20, surges up over 20, up to 2020. And look at right where this pulled back to, just below $20, holding as new support. Right there. Just below $20. $20 is holding as support now. This is ripping up to 2030. Holds support right there again. And then off she went all the way up to $21. A nice dollar grind all the way up. That's the power of the mental levels. Whole dollar levels, every $10, $100 levels. It's all mental in the markets. And look at right where this pulled back to. It was kind of like topping out all right here and right here at this 2050 level. And after it topped out here at 21, this pulled right back down to this 2050 level and is making its way back on up to that $21 level. CLVS, another good example on this. CLVS opens up at $13, gets a pop up to $13.60 right there, pulls back all the way to $13.15, and then pops right back up to that resistance from the morning right here, and then it's just sitting there, and then surges from $13.50 all the way up to $14. And when this pulled back, where did it pull back to? This level right here. Old resistance at $13.50. And from $13.50, grinds its way all the way up to $14.20. This is what we look for as traders. The stocks repeat over and over and over again. Patterns, simple patterns. It's just all about finding these stocks and tracking these stocks, having patience, and waiting for the stock to come to you. That's when you'll get paid in the stock market. And as soon as you're able to realize that, you'll be profitable and consistent. But really, CLVS is a great example for opportunity. You know, who cares what it did the first half hour right here when it opened up and popped, pulled back, and shot up. You know, it just showed you where its resistance is. They're at $13.50, right there and right there. And then when it finally ran back up and broke over that resistance, it just showed you where its new range is for the top, just above $14. So you wait for it, it pulls all the way back down to the area it broke out from, and right there, and it's also at around a mental level, $13.50, 50 cents. The more, the better. From $13.50, bounces and grinds all the way back up to over 14. You got your range on it, you got your support on it. Old resistance became support, and it moved all the way back up to its range. And now look, it's trending all the way back down to that $13.50 level. It's all mental. It can be hard at times and you will get FOMO. I still get FOMO from here and there. It's hard to fight a stock, or you don't want to fight a stock, but it's hard to contain yourself when you see a stock running up like it is. The first thing you always think about is, look at how much money I could have made. That's always the first thought of a trader. When they see a stock running up like that, look at how much money I could have made. You gotta stop thinking like that and think differently. You gotta stop thinking like all the sheeps do. And that's why all the sheeps chase and they lose. And 90% of traders fail. You gotta change the way you think. Let the stock run. Let it top out. And then let it pull back. So when it pulls back, that's when you start looking at multiple time frames. The 5-minute. Zoom out on the chart. The daily chart. The 15-minute. The 30-minute. The 60-minute. Let the stock pull back and try to see where there would be valid support at. That's why I like sticking to whole mental numbers. 50 cents, 75 cents, whole dollar levels. And look at ARQL today with that long wick right there. Where did it top out at? Just below a whole big mental level, $10. And when this pulled back, this pulled right back to 950. And from 950 kept popping up to 75 cents. And then look at that right there. It pulled back to around this 925 area and is grinding all the way back up to 50 cents. I'm serious. If you don't use mental levels, start applying mental levels to charts. When you look at charts, always look at the charts and focus on the mental levels of every 25 cents, 50 cents, 75 cents, whole dollar levels. You'll really start to see the power of mental levels. And then that's when you can start messing around with Fibonacci and all that other stuff. Take a look at the SPY real quick. Futures were gapping up this morning, and then right before the open, they started to get weak and sell down. And then right from the open, it just looks like the SPY has been just grinding all the way up to this 290 level. This 290 level is going to be big resistance for the SPY. It's currently at the top part of its range right now. And we got the Feds have a meeting the next 2 days. So that's also going to affect the market. The market doesn't like uncertainty. Look at that right there. Grinds all the way up, and then just 3 candles, sells it all back. Grinds all the way up, 3 candles, just sells it all back. Just look at charts every day. Look at charts. Look at charts every day. Break down the charts the best that you can. And over time, you'll just get better and better and better and better and better. That's the best advice that I could give. Look at charts, look at multiple time frames, and don't just look at one specific chart. Always try to look at candlestick charts, line charts, bar charts, because you always see something different on different charts and different time frames as well. And this is the power of the patterns right there. You see how that formed a wedge and then it broke to the upside. That's all traders look for, are patterns. Even TIGR, it's got light volume, but look at the mental level that pattern formed at, right at 450, and then boom, shoots all the way up to 75 cents. I think that's going to be about it. VISL's done for. They used and abused it. CTRV, I'd stay away from CTRV. This stock is always wait for the market to give you opportunities. CTRV, this is forcing trades. You don't want to force trades. If a stock is tradable, it'll be kicking you in the shins and blowing air horns right in your face. Look at this thing. This thing is deadly. So many death candles on this thing. That's what makes it untradeable. You got big sell-offs here, here, right there. A big one right here from $13.50 all the way down to $12. That's a $1.50 rip to the downside. Look at it. Grinds up, dumps. Hangs around, dumps. Grinds back up, dumps. Grinds its way back up, dumps. It's untradeable. And then even if you see how they kept bringing it up, another good example, a mental level, $13.50. $13.50 to $13. They'd rip this down, and it would even fall below 13. Right there, right there, right there. A lot of slippage on this stock. But if you were watching this, this is the type of stock, when you see all these death candles on it too, and it's untradeable, you'll still have degenerate gamblers sticking around on this, watching it, waiting for it to break over this $13.50, hoping that momentum will come into it and it'll rip to the upside. And I'll tell you right now, and you'll see it happen. A stock that's untradeable like this, and it's still hanging around, and look at all these hints it's giving you that it's untradeable. And if it's still hanging in this range, and if it does break this $13.50 level and pop up to 14, that's when you'll see the the market makers playing games. They'll punish the degenerate gamblers that stuck around. They chased that spike from $13.50 to $14, hoping for it to rip to the upside. And as soon as it hits 14, they'll rip it right back down to $12.50. Really, really hard and violently too. Watch it on stocks that are untradeable for the day. The market makers will play games with the longs that are trying to still trade it. Those are the types of traders that I call degenerate gamblers. They don't take risk and reward into factor. But again, guys, I hope you guys had a great day. Started the week off well. I'm starting the week off red. Took a red trade right on CTRV right out of the gates. I was able to salvage a little bit back with VISL. Just a quick pump and dump stock. But pump and dump stocks are my bread and butter. I love pump and dump stocks because I just see the emotions and the psychology in them. And they happen all the time. But that's going to wrap it up for this recap, guys. I'll see you guys tomorrow. And if you didn't trade today, tomorrow's always a new day in the markets. You gotta tell yourself that as a trader. You don't have to trade every single day just because you're a trader. The market's always going to be there. But alright guys, till next time, have that patience, have that discipline, and study, study, study as always, everybody. See you tomorrow. Later.